But when the Fed changes its policy in any obvious way, I think gold is going to bottom and recover. That's been the history.
That is interesting that we are seeing strength in the dollar, even though the longer term trend is a move away from the dollar. Now, we have seen pressure on the precious metal prices, and partly probably because of the strength of the dollar. How long do you see this continuing?
Yeah, that's a good question. Gold, frankly, this year, I think it being remarkably strong when you think it was facing the tailwind of two tailwinds of both the dollar being strong and interest rates moving up, both of which, other things being equal, are negative for gold. So I think gold had been remarkably strong for most of this year until this week. I think that's going to change when the Federal Reserve changes its hawkish policy. And I put hawkish in air quotes because I don't think it's hawkish at all. And we can talk about that if you want. But when the Fed changes its policy in any obvious way, I think gold is going to bottom and recover. That's been the history. And how long? It's anyone's guess. And again, this is a subject for probably a 3-hour discussion. But I think we'll get another 75 probably basis point raise in July. Then, of course, they have a break, which is lucky for the Fed because it gives them a pause without telling the market they're pausing. It's just, they don't have a meeting, so they won't do anything, I don't think. Then you come to September. And I think a lot will depend on what's happened to the economy between now and September. I suspect that we'll get another rate increase in September. And then, cynic that I am, the next thing is the midterm elections. And once the midterm elections are over, they may decide that they don't want to quite be as hawkish as they have been leading up to the midterms. That's just my guess. So by the end of the year, I think we'll see the Fed at least pause.
First was how we're seeing a trend over many years, it seems like over the past several years, and especially really ramping up since the Russia-Ukraine war, a move away from the US dollar as the world reserve currency. We're seeing the BRICS nations looking to develop their own reserve currency, but you have mentioned that this could take a while, and it doesn't seem like there's necessarily a very obvious alternative to the US dollar at the moment. So yes, a move away from the dollar is inevitable, but it's not imminent, as you've said, and also Rick Krull has said. So your perspective on that, if you could expand on that.
Yeah, no, absolutely. Rick likes to say just because something's inevitable doesn't mean it's imminent, and I think that's the dollar losing its reserve status is a perfect case to use that illustration. By training, I'm a historian. And if you look at history, when different countries have lost their reserve, the currency has lost its reserve status, which normally goes along with the empire, however you define that, declining, it can either be a smooth, rapid transition, or it can be a long, painful transition. And the most important criterion to look at is there an obvious alternative? In 1945, at the end of the Second World War, Britain was heavily indebted, huge welfare state, bases around the world it couldn't afford. It was clear that Britain was losing a lot of its military, economic, and even political power. Then, shortly after that, we started having the colonies, starting with India, becoming, ask for independence and become independent. But in that case, there was a very clear alternative, the United States, which in 1945 was clearly the most powerful economic, military, and political power in the world. And Britain at that time more or less liked America. We weren't hostile. And so the transition was relatively smooth. You can go back to the Roman Empire, where there was no alternative, and the decline took 400 years. You look at today's situation, which is what you're asking me, and I'm sorry, I'm interested in this topic. You look at today's situation, China is, in my mind, most likely, if not inevitable, but most likely to be the leading power, 50 years from now. Military, economic, it's already going to have a larger economy than the US within a couple of years. And by some measures, Goldman Sachs says it already has. And politically. But the problem with China is, apart from the fact that, their capital markets aren't deep enough, etc., that's something that will come with time easily and can come. The biggest problem is that America, today's empire, does not want China to take over. Not only does it not want it to, it is actively hostile to that. And so I think so first of all, the Chinese markets, capital markets, have to develop more. They have to have more depth. But at the same time, we're going to have some kind of accommodation between US and China, or it's going to be a pretty bloody mess, to be honest. And I mean bloody literally, not in the British swear word sense. So that's the biggest problem. I think you're absolutely right that more and more official institutions, not just governments, but official institutions, are turning away from the dollar as a reserve asset for some of the reasons you mentioned, and with the Russian. The ease with which the West stole Russia's reserves has to make a lot of countries around the world think very, very carefully as to whether or not they want their assets in the US dollar. Because let's not forget, over the last 70 years, let's say since the end of the Second World War, there's very, very few countries in the world that haven't at some point crossed the US and the US been angry with them. So, I think more and more countries don't want their reserves in the US dollar. You've also got the SWIFT issue, of course, which is a related but separate issue, where any transfers that go through the US banking system, which is virtually all, the US claims a right to determine whether those transfers are legitimate or not in order to be allowed to go on. And we've had egregious examples. A Spanish bank that invested in a hotel chain in Cuba. Spain does not have sanctions against Cuba. This was a perfectly legal, under US law, under United Nations, if you want United Nations law. Perfectly legal. And yet the US has sanctions against Cuba. And because the money went through the SWIFT system, the US claimed the right to fine that Spanish bank billions of dollars. And there's been other cases, as you know. So that's the sort of basic framework I see. In the shorter term, of course, and I'll be shorter on the shorter term, in the shorter term, so whereas you've got major institutions, Russia, of course, is already out of dollars, has been for years, they saw it coming. China is not buying anymore. Japan is actually selling. They've sold, been net sellers, and Japan was the number one above China for some time. They've been net sellers of treasuries for 8 months now, which is very peculiar. You think they're selling dollars and buying yen, when at the same time they're actually trying to get the yen down. So they must really not want the dollar. And other countries are doing likewise. But at the same time, you've got an interest rate differential between the US and other currencies, or other major currencies, that is only getting wider as we speak. And so when you look at the dollar in the short term, trade, just, if I buy something or if I sell something, that has an impact on the dollar, number one. Number two, what we might call speculative and shorter term, trading. And number three is what we might call longer term investment. And if you're sitting in Switzerland right now, a private investor sitting in Switzerland, and you want to park $1 million, I mean, do you put it in the euro do you put it in the German Bund, which, wow, they've just raised their rates to negative 2.5. That's a raise, that's an increase. Or do you put it in the yen, another negative yielding currency, or do you put it in the dollar, where at least you get some return? And so the interest rate differential right now is driving short-term flows. And it will continue to do that, I think, which is why the dollar has been so strong, despite, you know, everything probably I'm thinking, but probably you and I and many others are thinking. They've got a huge twin deficits, budget deficit, trade deficit. In economic theory, huge twin deficits should mean that currency declines. We know all the reasons why the US dollar should be weaker, but it's a matter of clean the shirt in the dirty laundry hamper. And I don't think that's going to change imminently, frankly, much as I'd like it to. I don't think it's going to, because Europe's not raising rates. Japan's not going to significantly raise rates. So we're in that sort of dichotomy between the immediate term and the longer term fundamentals.